all students out there. Today we are going to discuss final exam question. Question 4, Mfrs 141 Agriculture, question December 2018. And this question is on agriculture, right? As I said. Let's start. The first one, the question asks you to define the term biological transformation. So what is biological transformation? It has something to do with the physical changes in biological asset, right? So let's look at what you have here. The process of growth, degeneration, production, and procreation, which would cause either the qualitative or quantitative changes in a biological asset. Okay. Next, we look at the second one. The second part of the question is about asking you to calculate the gain or loss, as well as asking you to show the journal entry. But before that, let's look at something that you can revise from what you have been prepared here. So when you talk about gain on fair value changes, it can either be gain from price changes and also gain due to physical changes. So due to price changes here, it means that you are going to compare the same age, but you are going to compare those age or those same characteristic, similar characteristic at a different date, So you have different date here, and you're going to compare with that at the end of the year or with the one at the beginning of the year. So you're going to compare the prices, but the age are still the same. So this is what we're going to apply. But we are going to just focus on the two different dates to compare the changes in price. For the gain due to physical change, what we are going to do is that we're going to compare the price, which is at the same date, and the date here is at the end of the reporting date, which is at the end of the accounting period. Let's say in this question, the end of the accounting period is 31st of December. So we're going to just focus on those dates or those prices as at 31st of December for the different age group. And we are going to compare the two different age group according to their transformation, which will take note on what happened before and what happened after in terms of biological transformation, right? And the price is still at the same date, which is at the end of the year. So that was what you need to understand. And the total coming from this price changes as well as physical changes will give you the fair value change, yeah, or the so-called gain on fair value that you will have to credit to the SOPL as your revenue. Okay. So you are going to do that in a short while. But if you look at the first requirement, you are asked to record the new bond of the biological asset as at 1st of October. So if you read the question, you will see that there are 4 different age groups, where what I'm going to do is I'm going to list it, where this is the first one. You have 1.5-year-old and 2.5-year-old. This is the first and second. This is the one that is available at the beginning of the year, 1st of January 18. However, you also have some acquisition some acquisition that took place on 1st of July. 1st of July. This is 1st of July, yeah, and that is the price of, let's just take a different color. 1st of July, yeah, that was purchased at that time was a 50-year-old, 1.5-year-old cattle. Right, that was the new acquisition. That is not what is required. What is required is this 10-year-old calf that were born on 1st of October. Were born. So this is the new born. So therefore, this is what is being required in the first journal entry, which is to record what is the gain on initial recognition. So if you look at the price of the newborn on 1st of October, newborn, the price was 600, right? So you are going to use this 600, which is the fair value less cost to sell, and you are going to multiply with the number of the newborn, this one, multiply by this, and that will give you the first amount for the journal entry. So the first journal entry is that you're going to debit biological asset. Remember, this is the fair value less cost to sell on 1st of October 18. And 10 here refers to the number of the newborn calf. And that initial gain of biological asset will be shown as part of the revenue in the biological asset later. So that will form part of the carrying amount at the end of the year as well. Right? You are done with that. So let's look at the second part, which is what I mentioned earlier, where the question asks you to calculate the revenue. Right? And the revenue here is revenue coming from the biological asset, and it asks you to calculate and take into consideration those are the effect of price changes as well as the physical changes, and you need to calculate the revenue. So we're going to calculate the gain in fair value changes, and that one would be from two sources, which is from price changes as well as physical changes. We need to show the calculation. Right. Okay. So let's look at the first one, looking at the gain on fair value change, which is due to the price changes. So recall that price changes is where you have same age but different dates. So when we say same age, you need to look at the age here. The first age group is this 1.5 year. Second age group is this 2.5 year, and this is the units, right? And then you have another one. This is the one coming from the beginning balance, which is from the previous year that has been brought forward. During the current year, you have another age group, number 3, here I put here, which is 50, but that was for 1.5-year-old cattle. So 1.5-year-old cattle is another group that you need to focus, the third one. And how many of them? It's 50. So this is 50. So that was number 3. And the last one that was purchased on 1st of July. So these are the important date, 1st of July, that you need to record if you purchase, you need to credit your bank because they use check. Another one is on 1st of October. This is the fourth category, sorry, where you have 10, and those are the newborn. So I put here N, B. So those are the things that you should take note. So this has been listed here. Right, we have 4 categories. So let's start by calculating what are the gain in fair value due to price change for each of the age category. The first one, so we are focusing on the age of 1.5-year-old. So 1.5-year-old, you will compare those at different dates. So different date here, if you talk about these first 2 categories, these will be from comparing them with 1st of January 2018 with the price as at the end of the year. So let's start with this. Right, we will use different color to illustrate that. Okay, so the first one is this 1.5-year-old, 1st of January, the price is 1,000. You will compare with 1.5-year-old as at 31st of December. So 31st December versus 1st January. The unit is 120, which is this unit. Right, that unit there. So this is our number 1. So number 1 done. Right. Now you have so this is number 1 for you. So this is number 2, this is number 3, and this will be number 4. So I will do number 2 now. Number 2 refers to the age group of 2.5-year-old. 2.5-year-old, let's look at different colors. We have blue here. So you have 2.5-year-old, so you will compare 2.5-year-old, the price on 1st of January, beginning of the year, and you will compare that with 2.5-year-old, which is this one, right? 31st of December 2,200. So 2,200 at the end of the year compared with the one beginning of the year. And the unit is 80. So 80 times the difference. So you get 24, right? So that was the first one. Next, we go to the third one. The third one, which is the new acquisition. Our new acquisition took place on 1st of July 2018, and our new acquisition was this 50-year-old, 1.5-year-old cattle, right? So let's look at the price on 1st of July. Okay, 1,001, which is not beginning on the date of acquisition. So this is on the date of acquisition. These two are on the beginning of the year. Right. So you will compare with 1.5-year-old, which is this one, right? Okay. 1,006. So 1,006, 1,000. And the unit is this unit, 50. So times 50. You get to 25,000. So you are done with number 3. Earlier, what you were doing is for number 2. This is number 2. Okay, now we go and do the last one for the newborn. Our newborn, we take a different color. So we'll take purple itself. So the newborn, number 4. How many of them? 10. So when was it born? They were born on 1st of October. So price on 1st of October, newborn calf, it was 600. You compare with the price of your newborn by the end of the year. Why? Because you are looking at the price changes. So you compare these two prices. So you compare 750 and 600. It can also be the case where beginning was slightly higher, at the end will be slightly lower. That goes to what you call loss on fair value changes. But this one is a gain. Number 4. So you have this figure, the difference times 10. So this total is the total that you have for gain on fair value changes due to price changes. Okay, that was for gain on due to price changes. Next one, what we're going to do now is going to calculate the gain due to physical changes. When we talk about gain due to physical changes, we are saying that we are going to just focus on the same date. But when I say the same date, we are just going to focus on the date at the end of the year. At the end of the year. But we are going to compare the different age group. Let's say beginning of the year, this 1.5-year-old, right, cattle will now at the end of the year will grow to become 2.5-year-old, right? This 2.5 after a year will grow to become 3.5-year-old. And this 1.5-year-old that is on 1st of July, this one will now grow to become 2 years old because after 6 months, right? Whereas, so that's what you have here, and here. And the newborn baby, so the calf actually, that were born on 1st of October 2018, born after 3 months, 31st of December, right? So therefore, but on that day, it was 1 year old, here 1 year old. It will now grow to become 3 months. And when you calculate gain on physical change, do not forget to include what you have calculated earlier on the initial recognition, on the price on the initial recognition. So this one has been calculated, and we have done that through our journal entry, the first part that we have done. Okay, so let's look at the gain on fair value due to physical change. Remember, you need to look at the different age characteristic or different physical characteristic on the same date. We use a different color. The first one. So we start off with 2.5-year-old, yeah, and this one 1.5 versus 2.5. So let's look at 1.5-year-old here, right? The price is 1,006. The date should be the same. It grows to become 2.5-year-old here, right? 1.5. It grows to become 2.5. And you have the price was 2,200. So the changes in these two prices will be this minus this, and you will multiply with 120. This is the units, 120, right? Then you go to the second part where the 2.5-year-old will now grow to become 3.5-year-old. We're referring to this. Now we're talking about the second part. We use a different color. So here, this one, the unit is 80. Yeah, 80. And the 2.5, look at the price of 2.5 year, where the 2.5-year-old cattle is this, right? 2,200. And it will grow to become 3.5-year-old, the price here, 3.5-year-old, 3,200. And those are all at the same date, right? So you have 3,002 31st December, age 3.5, and 2002, 31st December, age 2.5. Units is the same here. So you have done the first part, the different, multiply with the units, right? Next, we go on looking at the third age group, where we'll use red now. So the third age group would be the age to 1.5. This one, 1.5, at the end of the year, right? And comparing with 2 years old, this one, 2 years old, also at the end of the year, So these two prices, this and this. So you have 1,008 at the end of the year when it reaches 2 years old versus 1,006, which is the price of 1.5 year old as at 31st of December as well. So multiply with 50. 50 is this one. So done. Right? Now we go to the next one. The next one will use this color. And the newborn from age in first day it was born until 3 months. So let's look at the price of a newborn calf. On 31st of December, newborn. The price was 750. And compare with the change in the age group 3 months as at 31st of December as well. 840. So 840, 750. What are the difference in those prices because of the age changes? So times 10. 10 is this. So therefore, you are done with this. So you get 900. 900, which is the calculation here. And you will get 10,000 from the second one, third one, and the first one. And remember, this one is from our gain on initial recognition. So if you total up, that will give you 168,900. So if you total up this 168,900 coming from physical change, and you compare, you total out with the one coming from price change, so you will be able to get a revenue of 291,400. These are the revenue coming from gain in fair value changes from both physical and price changes. The last part of the question you are asked to, second last part, which is the part that you are asked to calculate the carrying value. Carrying value means the balance, carrying value here, carrying value refers to the balance carried down. If you prepare the biological asset, refers to the balance carried down. But here we are not preparing. This is just in the form of statement. However, if you prepare biological asset, you should have a balance of 618,400. But here, what you're going to do is you're going to find out what are the beginning balance. Beginning balance, of course, these are from the price as at 1st of January 2018. This one also as at 1st of January 2018, because you want to know the beginning balance. So you will take the number of herd or number of calf that you have at the beginning, so which is 120 and 180, but those are different age group. So you multiply with the price of 1.5 year old here on 1st of January and the price of 2.5 year old here on 1st of January. So you have 152, right? The next one is you have your purchase. So remember, you purchase your 1.5-year-old on 1st of July. So the price here is the price on 1st of July. I'm talking about the fair value less cost to sell, and the unit is 50 that you purchase. So you have 55. So in this calculation, gain increase in fair value due to, oh, there's some mistake here. Let me just check. Increase in fair value due to this one is physical changes. Okay, just make some correction there. Physical changes is 168,900, the one that we calculated recently. And remember, this also has included the gain on initial recognition. And this one is gain due to price changes, 122,500. So the total we have calculated, that was 291,400, coming from those fair value change. These are the fair value change, right? So the total is 291,400. Total out with this, you get 681,400. That is one way of calculating, meaning that you use the statement, make use of what you have at the beginning, plus the new purchase, and then plus the gain on fair value change, yeah, which also includes the initial recognition gain. Alternatively, this is the simple way of doing, is by, this is simpler, I would suggest you to do this, is by taking all the price, where is it? Okay, is by taking all the price here, the price here, as at 31st of December 2018, because you want to know what are the carrying value as at 31st of December 2018, and you are going to take the price of the age group that is available as at that date. So taking into consideration the biological transformation, 1.5 grow to become 2.5, 2.5 grow to become 3.5, and those carry on to be done like what you have done before. Remember, these are the age at the end of the year. Age at the end of the year. So you take the price at the end of the year for the age at the end of the year, meaning that after taking into consideration the physical growth, and multiply with the respective numbers. So this is much simpler. The number is 10 times the price of the 3 months at the end of the year. The number is 50 times the price of 2 years old. Remember, this is what you acquire, right? And it grows by 6 months to become here. You have 1,008, the price at the end of the year. Same goes here. This is for the beginning of the year, where it grows to become 2.5 and 3.5. There are no death here. So if there are some, cessation of biological asset, that's another issue. So it will total up this. You still will get 618,400, which is the same answer as per what we did in the long version answer. But this is the simple way of doing it, alternative answer. But if you are to prepare the biological asset account, you also will get the same answer. Okay, that's it. Thank you for watching. I hope you will use the color coded style to understand better the price change. And with that, I'll see you when I will see you. Assalamualaikum warahmatullahi wabarakatuh.